Hello everyone, this is Rachel live from Kalkine Studios and you're watching the early trades. Shares were 0.3% lower in early trade this morning. That's as the materials sector lost 1.1% on softer iron ore prices. The financial sector is down 0.3% with blue chips NAB and the CBA opening on the back foot. The best performing sector is healthcare, up 0.3%. Now, budget jewellery retailer Lovisa is up 5% to $22.70. Now, that was after a big valuation upgrade from broker Macquarie. There were no major developments overnight, but collectively enough negatives to knock the ASX off a 2-month high. The dollar rose against the US dollar, yields increased, iron ore and copper fell, and shares in BHP and Rio Tinto retreated. The S&P ASX 200 climbed 27 points, or 0.36% yesterday, to its best finish in more than 2 months. The index closed at 7,470, a level that's marketed the upper part of the benchmark's ambitions over the last 10 weeks. The index has not tested 7,500 since the 9th of September, and the wait continues. Now, US materials declined 0.46% as commodity markets responded to yesterday's weak Chinese property data. The cost of new homes in China fell 0.25% last month, the market's first setback in more than 6 years. Health, consumer discretionary and technology also lost ground. Defensive utilities put on a 1.31%, consumer staples 0.48% and real estate 0.48% also. The financial sector edged up 0.02%. The Reserve Bank is back in the spotlight this session. The minutes from this month's policy meeting were released today, showing the RBA's November monetary policy meeting discussed 3 possible options for its abandoned yield curve control policy. They were to continue with the target to 10 basis points for the April 2024 bond, and to adjust the target by raising the target yield or shortening its tenure to a bond maturing in 2023, or discontinue the yield target altogether. Now, the bank has said it's chosen to abandon the target given faster than expected progress towards the bank's goals and the revised outlook for inflation. The minutes also provided some more detail on the likely continuation of its emergency bond buying program at $4 billion a week beyond February 2022. They said the board's review of the program till February will be based on the same 3 considerations as the previous reviews, namely the actions of other central banks, how the domestic bond market is functioning, and the actual and expected progress towards the bank's goals for inflation and unemployment. Moving on, and Governor Philip Lowe is due to deliver a speech on inflation within the hour. We'll bring you the latest on that as soon as we get it. Also, consumer weekly confidence figures are also due. AGM season resumes with updates from Mirvac, Pilbara Minerals and Lifestyle Communities. Telstra is holding an investor day today. Looking to the IPO space, Evolution Energy Minerals is set to list at 12:30 p.m. That's Australian Eastern Standard Time. The miner's pitch is sustainable graphite products for the global green economy. The company intends to mine graphite in Tanzania. Moving to the next news now, and Zurich-based fund manager Swisscanto Invest has injected more than $500 million into Australian government bonds, pushing weekly fund inflows to the highest level in at least a decade, in a bet that market forecasts for the higher interest rates have run ahead of themselves. The Swiss fund manager poured $505.8 million into its Australian bond fund this week, ending November the 3rd, doubling the fund size and marking the biggest weekly inflow into a listed Australian bond fund on record. Moving on, and corporate regulator, the Australian Securities and Investments Commission, has accused investment spruiker James Morwini, who created the fizzled Mayfair 101 group, of raising funds in breach of court orders. The 37-year-old has been sued in the federal court, with ASIC accusing him of contempt. He's previously maintained any activities were taken subject to legal advice to ensure he was complying with the law. Now, before we move to more newsmakers, it's time for a very short break. I'll be back very soon.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Hello and welcome back. I'm Rachel. Let's move our attention to the newsmakers. Now, copper producer Oz Minerals has hiked its total copper reserve estimates by 5% to 10.3 million tonnes of contained copper. Mineral resource and metal copper estimates were lifted by 2%. Record-breaking copper prices in 2021 have climbed and have helped Oz Minerals shares climb 70% over the past year to last close at $25.51. Healthcare business Capital Health will tell its AGM attendees the revenue is up 9.7% to October the 31st versus the prior corresponding financial year period. The company will target operating margins of 23% to 24% over financial year 2022. In 2021, it posted free cash flow of $25.9 million on a revenue of $178 million. Shares are up 27.8% over the last year and closed at 34 cents. Westpac has paid a $344,000 contrition payment after it was revealed it underpaid thousands of workers a total of $6 million. The bank has entered an enforceable undertaking with the Fair Work Ombudsman and is paying back $6 million in wages, superannuation and interest to 6,400 current and former employees. According to the Fair Work Agency, payroll system errors resulted in the bank underpaying overtime work, average weekly hours, bonuses, commissions and sick leave when determining how much long service leave to accrue to employees between 2014 and early 2021. Individual underpayments range from less than $1 to more than $75,000, and affected employees were located across all states and territories and ranged from bank tellers to managers and corporate staff. Moving on now, and mortgage lender Resimac says it posted record home loan settlements up 72% to $2.5 billion for the period between July to October 2021. Its home loan book has grown at an annualised rate of 15% on the prior year to $14.5 billion as at October the 31st. It said assuming financial markets remain stable, it expects first half financial year 2022 profit to remain in line with the first half of financial year 2021. Now, Resimac shares are down 8% over the past year and last closed at $1.80. That's all for now for your early morning trade. Stay tuned to Kalkine TV. We've got many more shows lined up for you, sharing live updates across the economy, markets and sectors. This is Rachel signing off.